But first, let's get you up to speed on housing. With loads of data coming in recent weeks, really paints a picture of a market that may not have seen the worst of it after all. We want to focus in on 3 data points from this week in reverse. Okay, mortgage demand, Case-Shiller, and pending home sales. Up first, mortgage demand falling for the 3rd straight week, according to the Mortgage Bankers Association. Demand dropping to a 28-year low. It's down 6% from just last week. Overall, you see volume down 44% below the same point last year. This all is really a result of mortgage rates also rising 3 consecutive weeks to 6.5% on the average 30-year fixed. That's the highest point since November. Rates were also 3.89 1 year ago. Up next, home prices decreasing slightly in December, according to the S&P CoreLogic Case-Shiller Home Price Index. The national composite falling 0.8% month over month as high mortgage rates help slow price gains. But those price gains are still too high. Home prices as of December 2022 still up 5.8% year over year. And that is important. Still up no matter what you're hearing in these last couple of months. And finally, pending home sales. The index increasing for the 2nd consecutive month, up 8.1% from December. That's the largest jump since June 2020. Despite this bump, pending home transactions are down 24% year over year. The backdrop of all this is not Fed hikes, despite what many urge you to believe. It's really the 10-year. That eclipsed 4% earlier today, its highest level since November. It was up more than 50 basis points in February alone. As we start March, most economists felt the worst was behind us in relation to housing. That may not be the case, Seana. I was with them. I too thought it was all uphill from here because the data really was reflecting that. The problem is rates feel like we're headed back to 7%. I hope they're not, but we thought we were going to 5 before 7, and now we're on the up.
Yeah, I think you and I both shared in that optimism there, hoping that maybe the worst was behind us. It's all going to depend on that mortgage rate number. We heard that from Mark Zandi from Moody's yesterday when he was talking about what to expect when it comes to housing, more specifically what he's expecting to see when it comes to home prices. And he was saying we have further to go in terms of the drop that we need to see in home prices. He was laying out the scenario. If there's no recession, if mortgage rates stay within the 6 to 7% range, don't go back above that 7% number, we will see a 10% peak to trough decline in prices. So if you take that into consideration, we're about a fifth of a way there. The fact that we've dropped about 2 percentage points there already. Morgan Stanley tends to agree with him, but they were saying, though, if mortgage rates do fall more than expected, we don't necessarily need to see or will likely see that big of a drop in home prices. It might look more like that 5% number that we had talked about in the past.
Let's just be clear. I do not think home prices are going to collapse. I still think a low single-digit drop, and they'll still be higher than they were year over year. But a couple of things anecdotally. I'm talking to realtors who are saying, hey, they feel the spring season. This is California, New York, Connecticut. They're feeling spring season. They're feeling inventory start to open up. Look at home builders. Toll Brothers is up 17% this year. KB Homes is up 8.5% this year. Lennar is up 5% this year. That is well outperforming the market. So there is certainly some optimism. It just feels like, again, there are some bumpy times ahead of us the next couple of months. But again, watch the 10-year. Not the Fed, watch the 10-year.
Yeah, and the 10-year breaking above that 4%, certainly getting everyone's attention.